Hello, everyone. Welcome to this session, 5 factors to consider before selling a property. If you have subscribed our YouTube channel, you probably noticed that on the same day, I have only just recorded a session on 8 factors to consider before buying. Actually, before buying and selling, talk to an experienced tax planner is critical. Yeah, it's super important. Because if you don't have the knowledge, it's almost like you're going somewhere very dark with a lot of traps without a torch. That's how dangerous it can be. All right. So let's have a look at the factors you got to consider before selling a property. Okay. All right. Again, before we go to the main content, a quick declaration. This information provided, the information provided here is for general guidance only. We recommend consulting a qualified tax advisor or planner before implementing any tax planning strategies. Also, we're not licensed financial planners and do not provide financial product advice. For personalized investment guidance, please consult a licensed financial planner. All right, now let's have a look at the factors. So the first and the most important factor, of course, is capital gains tax. Okay, so a lot of people, when they come to us, it's already too late. They missed opportunities already. Yes, financial year already passed. So I guess before you even consider selling, you should consider how much capital gains tax do you need to pay. Okay, and then can you use any tax planning strategies to reduce your capital gains tax? Is it possible to claim a full or partial capital gains tax exemption? What cost-based deduction can you utilize to lower your capital gains tax liability? Okay, are you a foreign resident and do you understand the related tax implications? Okay, similar to the other session I did on buying a property, there are so many underlying considerations on each question I have listed. Yeah, normally with consultation, either property pre-purchase or after purchase consultations, we need to take at least 1 hour, at least 1 hour. Quite often we're going over 1 hour to outline everything because everyone's circumstances will be different. So that's the reason why I'm only just listing questions here to get you to consider. Yeah, there are so many hidden traps if you don't get a planner to help you. All right, capital gains tax. Second factor you need to consider other tax planning strategies. Yeah, there's actually a lot to consider, potentially can come in to help you to reduce your tax. Okay, should you consider additional deductions if you realize a significant capital gain? All right, for example, concessional super contribution in that year. Okay, we every year, every single year, we have clients when they come to us, it's already too late. After the end of the financial year, they can't go back one back clock to contribute super concessional super anymore. All right, because it has to be done before the end of the financial year. All right, so that's a good example. Okay, second question here. Should you consider selling other assets with capital gains if you have incurred a substantial capital loss? All right, have a look at your full asset portfolio. Yeah, consider selling assets with capital gain to utilize the capital loss in the same year. And have you reviewed your family group structure to determine if any tax planning opportunities exist, okay, to help each other within the family group wherever possible. All right. Okay, number three, timing of expenses. So when should repair and maintenance costs be incurred? So what are repair and maintenance costs? And when should they be incurred for you to achieve a better deduction? Okay, of course, what is general repair maintenance? Generally speaking, when you have a tenant living there, you can claim an outright deduction on the rental income. All right. And then of course, that's actually better than claiming a deduction on capital gains tax because capital gains tax, there's a 50% discount. Then you're actually reducing the deduction by 50%. All right. So that side is actually quite advanced. Maybe if you don't quite understand what I'm talking about, you got to have a tax planning session All right. And then should depreciation expenses be claimed in the final year? Okay, again, where expenses should be added, okay, rental income or capital gain or loss. Okay, when it's okay based on tax law, and you can go either way. Okay, which way is actually better? Okay, so that's actually quite important as well. All right, number 4, timing of sales. First question, is it even necessary to sell now? Do you have to sell now? Last year, actually every single year we got the clients, when they come to us, they already sold the property within the last financial year. And the only reason they provided was it's such a big hassle to manage the tenant. The tenant was so difficult. And then, oh, I just don't want the hassle, so that I sold it. Is that a good reason to, and or a what like worthwhile reason when they need to pay 40K, 50K more tax, considering delaying it a bit later to another year, or maybe after retirement? Okay, so that's a key question. You need to ask yourself. First, of course, understand how much capital gain you have to pay. If 40K, 50K, would you be able to tolerate or work a little bit longer with a tenant, or maybe change a tenant, just go through the hassle, and then to save that 50K? What if it's small? All right. And then second question, would delaying the sale to a later year reduce your capital gains tax liability? We had an experience, I think was quite extreme, when someone wanted to sell 3 properties in 1 year. Okay, by delaying 2, they saved quite a lot already. I think it was 50, 60K, something like that or more. All right. Have you reviewed other capital events occurring in the same year? Okay, to connect them to each other, potentially achieving a better tax outcome. Okay. Have you examined whether assets owned across your family group offer additional tax planning opportunities? Okay, look through the family group. All right. Also consider timing. All right. Time it together with your family group, other assets in the structure if you're connected to each other. All right. Number 5, cash flow considerations. Are you aware of how much capital gains tax you need to pay? All right. After considering all the above factors, utilizing all the tax planning strategies, the final figure, how much do you have to pay? Are you aware of that figure? Do you know when this tax payment is due? Okay. Will your future cash flow be sufficient to cover this payment? Quite often people or taxpayers sold the property. Okay, maybe they sold it in April, May, in the financial year. They found us after the end of the year. Okay, August, September, they're ready to lodge their tax return. Then suddenly they realize they have to pay a huge amount of money. Yeah, 50K, 70K. Where is the money? I didn't know I have to pay this much. Then that's really dangerous. Okay, if they don't even have that cash flow, they already spend their money. Okay, that's really, really scary. All right, you need to be very careful. All right. Okay, so that's basically the key 5 factors. Of course, in reality, there are more to consider. Yeah, extended from that 5 factors. And here is a brief introduction about myself. You can pause the video to have a look. Also, my contact details here. If you have any questions, give us a call. Of course, more importantly, before you sell a property, before you sell, book a consultation with us or an experienced tax planner. All right, you got to do this to save tens of thousands of dollars. Plan ahead of time. All right, thank you. We'll talk to you next time.